revenues grew by 1.7% year-on-year and 1% quarter-on-quarter on a constant currency basis. Our rupee revenue grew by 4% to reach 60,583 crores. Our continued focus on operational excellence helped us achieve an operating margin of 25%, which represents a sequential margin expansion of 75 bips. This translates to 15,155 crores of operating profit. Our net profit for the quarter has come in at 19.4%, translating to 11,735 crores. Again, this is an expansion of 40 bips in the net margin. Consequently, our EPS reached 32.14 from 31 in Q2. So, margin numbers, all the numbers actually that I mentioned that we'll be discussing exclude a one-time charge of USD 125 million towards settlement of legal claim. Cash from operations at 11,277 crores is at 102% of net profit. The board has declared an interim dividend of rupees 9 and a special dividend of rupees 18, amounting to about 9,800 crores. This is in line with our practice of returning 80 to 100% of our free cash flows back to our shareholders. Our customer metrics continue to improve despite seasonality and macro uncertainties. The number of customers from whom we make more than 100 million rose by 2 to 61 customers on a year-on-year basis. There has been good additions across all the other bands. In addition, our customer base of 1 million plus also stands at 1,288, an increase of 71 customers over last year. Moving on to segmental commentary, the new growth markets of India, Asia Pacific, Japan, Middle East and Africa and LATAM had very strong growth, validating our approach of portfolio diversification. Especially, our revenue from India grew by 23.4% on a year-on-year basis. Among the major markets, UK grew by 8.1%, led by market share gains. North America had a degrowth of 3%, reflecting the overall market uncertainties. Europe has continued to grow on sequential basis and achieved a 0.5% growth on a year-on-year basis. Among the verticals, manufacturing, life sciences and healthcare, energy and utilities, and regional markets and platforms had a strong sequential growth. On a year-on-year basis, manufacturing grew by 7%, life sciences and healthcare by 3.1%, energy utilities by 11.8%, regional markets and platforms by 19.2%. As you can see, impacted by market sentiments, BFSI degrew by 3% and consumer business degrew marginally by 0.3% on a year-on-year basis. Our deal wins continue to be very strong. Our order book closure for the quarter stands at $8.1 billion. This has been achieved without the support of any mega deals. This represents a year-on-year growth of 3.4%. Our order book for North America stood at $4.2 billion, for BFSI at $2.6 billion and consumer business at $1.5 billion. Our attrition continues to improve. On LTM basis, our IT attrition has reduced to 13.3% from 14.9% in Q2. Subsequent to the launch of our AI.Cloud business unit, we are seeing an increased traction in the marketplace. We are now seeing GenAI POCs pilots moving into production. In Q3, we had 4 production deployments of GenAI engagements. We have enhanced our partnership also with all the major players in this space. As an update on our R&D efforts, we have filed for 187 patents in Q3 and were granted 305. Our continued efforts in creating IP have been recognized with the Asia IP Elite Award 2023 for being an exemplar of IP value creation. With that, I hand it back to Kritika and we'll open it up for questions. Back to you, Kritika. Thank you.
Thank you, Kriti. We'll start our Q&A with Reema Tendulkar from CNBC TV 18. Reema.
Gentlemen, good evening and Happy New Year to everyone. Great quarter, despite all the, tenuous external environment. Kriti, first an overview of the macro environment. Would you say the situation today is better than it was 3 months ago? Qualitatively, if you can provide some color, and what are budget conversations looking like? And also, what is the growth X of India, the BSNL deal, and when do you expect your core markets, North America, BFSI, etc., to recover? NGS, for you, the question is on deal wins. I remember last time you said that maybe the deal win run rate could be $9 to $10 billion. It's fallen a little short of that at $8.1 billion. And why is it that the industry itself has not seen mega deals? And also, if you could just give us an update on Gen AI, how has it changed compared to 3 months ago? Samir, if you could tell us, 70 basis points, what led to the margin expansion? And 3 quarters back, you had a target of hitting 25% as exit margins. You've done it this quarter. So what could exit margins for FY24 look like? And Milind, for you on attrition, it's in the comfort range now. So do you see it trending lower? Is that trend continuing? And even on moderation, why is your employee headcount moderated? Thank you.
Thanks, Kritika, and Happy New Year to everyone. I think still we are not in a position to call whether these macro, from our perspective, situations that hasn't changed much. There was a sense of optimism when the interest rates were not hiked, but it has not resulted in any ground level certainty or decisions being taken towards new investments. Maybe it will happen after some time. We'll get to know maybe as Q4 unfolds, but I think it's too early to call. We are not seeing any ground change. On the budget question, we have we'll get to know, but also increasingly we find that there is a limit. We are placing far too much importance on budget because we feel that our clients take decision on a quarterly basis, and so it's more like a planning horizon on what they intend to do. But most of our clients have been very agile, looking at the market situation. They keep changing. So I will not read too much into, even if we get, we'll get no. Like it's not in a position to be calling out as it's growing or whatever. I would say it's probably more stable like last year. Yeah.
And also on growth ex BSNL and your core markets.
You have the number, Samir?
We don't call that number out in terms of client-specific numbers, excluding that.
Ex of India then, which is up 23%. Is that a number we should look at because it's bumped up a lot?
You could do the maths in terms of...
I think we can go into the details after.
As I said, the sentiments have been same. So I don't think we are ready to say that it will recover by Q4 or by Q1. We will not call that out now.
Yeah. I think, overall, the situation has not deteriorated from last quarter, right? Given all the things that we are all hearing from everybody, the fact that there is no deterioration itself is a very positive sign, right? Secondly, I think, with reference to the deal wins, I think fantastic, 8.1 billion in this market situation. We're very proud of our sales teams, our account teams. The fact that it has come without any mega deal support. And it has been pretty broad-based, so we're really happy with the deal that we have secured. Besides, the qualified pipeline that we see is actually increased after securing this 8.1 billion. Right? So there is a demand out there, and that's something that we have to go and capture it as it matures. So I would say that we are pretty happy where we are with respect to what we have accomplished in this quarter and how we see things emerge in the coming quarters. Right? I will not read too much into BFSI degrowth as well, right? Because actually, if I look at the client portfolio that we have, the client portfolio actually has done well. Couple of large clients where we were executing large transformation programs just got finished and we've delivered them successfully. So we'll have to see how that pans out with these new clients these new projects with these clients, as they go through the budgets for this coming year, etc. So overall, I feel that, comfortable that we have secured $8.1 billion worth of deals this quarter, right? The other question, I think, is Gen AI. Gen AI, I think, as Kriti pointed out, I think it's moving into a situation where people are comfortable with it. They want to try out new things. They want to try it in very new areas across technology, operations, and everywhere else. I think we have continued our focus on training majority of our workforce on using Gen AI and coming up with innovative ideas of using Gen AI to improve our own productivity and efficiency, as well as deliver projects in an architecture which can evolve on its own, right, using the Gen AI thing. The possibilities that we see for the future using Gen AI are enormous, and we only hope that it will realize its potential.
So on the margins, Q3 margins at 25% are in sequential improvement of 70 basis points. The walkthrough of that is, in spite of headwinds of 80 basis points, comprising mainly from furloughs and higher third-party expenses, we were able to more than offset that with disciplined execution and operational improvement of 60 basis points coming in from productivity and realization. Further 70 basis points coming in from reduction in subcontractor expenses, and we got 25 basis points support from currency. As you know, this is the 70 basis points is delivered on back of 110 basis points in the previous quarter. We don't give guidance, but we hope the momentum continues.
Rima, 13.3 is our comfort range. Very, very satisfying to see these numbers. Very proud of our entire TCS team to come together and drive this number down to our comfort range. Whether it will come down further, I expect it to come down further. With respect to your question on employee headcount moderating, the answer remains the same. Actually, what I've been saying all along, that we've made a significant investment and we've made so much of hiring in the past years. We are continuing to leverage that investment today and driving business that way, and not needing to hire more.
Anisha Jain from ET Now. It's just a little easier if you ask your questions one by one. Easier to remember.
Great. If you let me ask all my questions.
2 questions, Anisha, as always.
Sure. So let me start with Kriti first. Last quarter when we met, you were talking about how the deal ramp downs have been there, in the sense that they weren't ramping up to that pace. Has that changed now in terms of the client billings? Has that normalized? And about North America, NGS said that he's saying that no bad news is good news. But are you a bit disappointed that North America is not recovering? Because, the commentary from Fed and the businesses have improved, but the sentiment clearly has not. What's your assumption of the timeline there? I'll wait by and then ask rest of the questions later.
Okay. First on, what we talked about last quarter also is clients continue to reprioritize all the ongoing programs. And there is because of the market sentiments, the return on investment expectations are higher. So whatever doesn't meet those expectations, those projects get passed. And I don't think there is any major change in that, because, as I said, there's no major change in the sentiment. At least there's no on the ground. And am I disappointed? Yes. We definitely want to grow. We want to grow faster, and we expect that. At least our deal wins are good, as NGS pointed out. We are winning deals. So we're hoping the medium to long term it will recover.
Okay, point taken. NGS, so are you hinting at $9 to $11 billion going forward in quarterly TCV, or 8 to 10? And this year, of course, the double-digit growth is difficult. But are you ruling it out for FY25 as well? Because at least the base is a bit more favorable. And if the pickup does happen, you see a realistic potential of double-digit growth in FY25?
Our goal is to go and win every opportunity that comes our way. I don't want to put a number now, 8.1 or 5 points.
Of course, everybody wants to do the best, but realistically speaking, what do you...
I think it's good. As I said, we are extremely happy with the performance of our sales team. And 8.1 billion is in this quarter especially, it's a great performance. The qualified pipeline looks good. And this quarter, there's no mega deals, which means that mega deals are still maturing, right? So I think we are happy where we are. And I think, wait to hear from us more, right?
Any word in terms of double-digit growth possibility in FY25?
I mean, as I said, look, this business, opportunity is there, demand is there. There will be constraints like what we are facing today, and there are uncertainties. So we have to weigh in all of this and then see whether we can improve our market share in this kind of situation. I think we are happy that we are increasing our market share wherever it presents ourselves. And overall, compared to last quarter to this quarter, I think in select areas we have improved our market share. Our focus is going to be increasing our market share in this kind of conditions and participate in all the big, large transformation projects. Win them, as well as whatever we have won them, see how we can accelerate, using technologies like Gen AI. If I can deliver it in 3 years rather than 4 years, then that will be Christmas, right?
Okay, waiting for that Christmas.
Yeah.
But Samir, the question to you, the margins have improved quite a bit despite the headwinds. It's at, 7-quarter high, if I have it right. Going forward, what are the more levers available for you to grow it further? And the risks are more skewed to upside or downside? Because you're very close to that guiding beacon of 26, 28 now.
Okay. So yes, margins are at a 7-quarter high. And we remain focused on disciplined execution and driving operational excellence. The levers remain productivity, utilization, as well as realization, which we have called out and driven through the quarters. That's what has delivered. Depending on the demand environment, you could squeeze or not on the subcontractor cost as well. And from a long-term perspective, pricing does remain a lever. So with all of it, we are committed to our guiding beacon.
Okay, so good to hear that pricing is a lever and not a pressure point. So you're gaining market share and maintaining your pricing at that. But the question to you, Milind, the headcount decline really continues. Another 5,600 headcount decline this time around. Is this the run rate we should expect in near future? And by near future, I mean the next couple of quarters. The kind of bench strength that you have, should we expect this decline to be normal?
I won't be surprised if that happens, but that doesn't mean that we are continuing to hire. We hired a good number of trainees, good number of people from the market, and even in this quarter, so we will continue to hire, but, depending on the overall situation and including our own investment we made, we continue to rip off on that investment and, drive efficiency, as Samir said. And as a result, if the headcounts becomes negative as a result, then so be it.
Sure. I'll hand it over to others for the questions as well.
Thank you so much. Dipangana Ghosh from Money Control.
Hello, gentlemen. My question to Kriti, I wanted to understand this BFSI degrowth a little better. If you could give us a breakdown of how things have shaped out within BFSI. Are you seeing pressure in certain geographies? How is it playing out?
See, I would say degrowth is, there are two aspects. Like one, we had some since a particular North America, some large programs coming to an end. So the large programs, in fact, sometimes it's I was explaining, like they very successfully we complete them, but then another replacement program doesn't start. So that has an impact on this one. And there is a furlough impact in some parts of Europe. So these two primarily are the reasons why you see a degrowth in BFSI. So, but as I said, but we've been, like NGS mentioned multiple times, like we've been winning very good deals in BFSI as well. And we have a very good pipeline. So we are confident medium to long term growth will return there.
Right. And also we see the growth in India stands out at like more than 23%. So do you expect this to continue in the upcoming quarters? What's driving that growth?
Obviously, like India growth is driven by the positive seasonality like we do. And of course, BSNL, we started to deliver BSNL programs. So the revenue from BSNL also comes. So these two are important factors. Will we be growing 23% every quarter? Like that will be a stretch. But will we continue to grow? Yes, we are very focused. We will continue and hope to grow.
Right. Had two quick questions for Milind. So you had earlier mentioned that you're expecting to onboard 40,000 freshers in FY24. So do you still stand by that number, or is there an update?
See, I think overall for the year, I still stand by that number. How we start up with what number and eventually where we'll end up is something we'll decide as we go along.
Right. And the other thing is, this is more from an industry perspective. We are seeing the poaching issue coming up within the tier 1 IT companies. I don't think TCS has reported or seen as much of that happening, but just wanted to get your thoughts on, will this lead to senior employee contracts changing, or do you expect an impact of this?
I did not get the question. Sorry.
No, I just wanted to understand, the whole thing happening, that a lot of company veterans moving across rival firms.
We have not. Have you seen that in the past from TCS? The answer is no.
Not as much, but just.
No, so answer is no. So that continues.
Sure. Thank you so much.
Thank you. Sajid Mangat from NDTV Profit.
Hi, gentlemen. Happy New Year to you all. Kriti, you spoke about that on the ground. Nothing has changed for you compared to the last quarter. Give us a sense of how the discretionary orders are playing out. Are they coming, or still on a very slow pace, which is coming in? And do you see as new products from a Gen AI point of view, you rolled out 4 of them in the quarter. Do you see some of the clients moving towards that instead of a normal new contract that's going to come in from your end?
See, first on the discretionary projects, we don't see a major change. Okay, we on a environment like this, clients would focus more on cost and optimization than transformation. So there is no major change as discretionary, not discretionary, but the project focus tends to be more on cost optimization than transformation. So, the second point there is all the projects that we won recently, all of them we've been continuing to execute mostly as per plan, and so there is no rethink on what we signed in recent past as well. So there is no change in the whatever clients signed up with us in the last 1 year. We are continuing to deliver on them, and the revenue flow is along expected lines, and there is no major change discretionary or non-discretionary. Gen AI, I don't think that is impacting at this time. Clients, the way we see it is, clients are trying to see what benefit they can gain, and they're doing multiple experimentations. I talked about some of the POCs moving into production, but they're all small projects. We are not talking about huge, large projects here, and so that continues to happen, but it's not eating into regular TCV.
You've been giving good amount of TCV every quarter for the last couple of quarters there. But, the execution is something getting delayed because of decisions at client levels, or, project starts are not happening on time. Have you assessed the total TCVs that you have got over the last couple of quarters on how they are, stacking up with respect to, are they active, they are on a slow pace, or, they've been deferred by a few weeks or month or quarter?
So just now, that's why I mentioned, whatever we won, we've been executing as per plan, and the revenue flow has been as per plan. What is hurting us is the programs that we started maybe a year ago, 2 years ago, that are getting reprioritized. I want to reiterate that the programs that we started in the last 1 year, they continue to deliver as per plan. We don't see any of the programs that started after that. See, once uncertainty was known, we called it out, I think, around last Q4.